Welcome back to the Novosphere podcast. The second one in today. The first one, that was my fault. We had a great conversation that you unfortunately will have to miss out on. But yeah, today we have Oscar. How do you say your last name, Oscar?
Goulet, Oscar
Okay,
Goulet,
Oscar Goullet. Oscar Goullet from and your company's name, your project's name.
Anox.
Anox. Okay, I knew it was something like that. So we have Oscar Goullet from Anox, the first ever security token to launch on the EOS blockchain. We're here today to talk about his project. If you didn't know, we just concluded the AMA yesterday. They asked me anything on the Anox forum. So if you have any questions that you didn't hear covered today, you can always go to the AMA, even though it's finished. Drop Oscar a question and he will happily answer you. We also have Peter, a community leader in discussions. He's the one in all the Telegram groups chatting the people up. So yeah, welcome back, I should say.
Thank you. Yeah, good to be here. Good to be back. Back once again.
Yeah, round two. So yeah, Oscar, let's go to the briefly give an overview of your project and what are you aiming to achieve with Onyx.
Yeah, I don't think we actually really covered that last time, but yeah, so we're a security token, the first one on the EOS blockchain. Our vision is we want to sort of make the exclusive financial system that's really right now only accessible to the uber rich with $1 million in disposable income, in disposable wealth. We want to make that accessible to each and everyone on the planet.
That is a fantastic summary. So yeah, the first ever security token to launch on EOS blockchain, and just playing up with what you just said, it is true. If you are not a accredited investor, I think this is what Oscar is referring to. If you basically don't have $1 million in your bank account, you are barred from entry from a lot of investment opportunities. Is that
Yeah,
correct?
that's
Yeah.
correct. And yeah, and it even excludes the house you own. So even if you've got a $2 million house, unless you've actually got $1 million spare in your bank account in stocks or bonds or whatever, then all the investments that rich people make, which is largely just hedge funds, that's just inaccessible to you. You need $1 million to open those doors.
Yeah.
So
So
basically, you are going to collect the $1 million from retail investors, right?
Yeah, so we'll hopefully a lot more than that.
I
You
mean
know,
the
the
minimum,
average
yeah.
in the average ICO last year was 30, so we're aiming for 30. The market's a lot tougher now, but we want to raise as much as possible.
and what will you be using that money you raise for?
So you just cut out for a bit there, Jux. Can you say that again?
Yeah.
So yeah, you say you want to raise, $30 million, and we brought it up a little bit in the previous podcast. What will you be using this money for?
Yeah, so we'll be investing 80% of that, and that'll be going directly into other funds. We'll be investing in other hedge funds. 20% will go to marketing, all other costs associated with that. As we covered a bit earlier, to even pull off a successful offering these days, you need to throw a sizable marketing budget at your offering to begin with.
Yep.
So there's substantial costs involved.
Right. Right.
Are you going to invest in one fund or multiple funds?
Yeah, so initially, we've got our partner funds performance up there on the net. They're doing 39% returns annually for the past 4 years, which from memory was like 380% or something ridiculous. I know it's not that ridiculous in the cryptocurrency space, but for a dollar pegged instrument, that's a really good return. And we'll be setting the bar around there. We want to return to our investors 25% NAV growth, uh, which means we need to be only working with the best of the best funds who are really top of their game and doing exceptionally well.
Okay, and you are aiming for like capital gain, really, not for dividends, right?
Yeah, correctly. So we will be paying out dividends because we want the community to really be involved in the project and sort of having a say in, for example, how big a dividend we pay or what the token inflation is. And eventually, we might like the community to actually be able to cut us out of the picture and form a foundation and run the whole thing itself. We're not in any rush to be the DAO on Ethereum, which dived straight into that completely decentralized model, and it did not work out too well. But yeah, so we're going to use dividends to incentivize community staking and holding and community governance, but that'll only be a small portion of the gains we're accruing. We want to just compound grow the majority of those returns, leading to capital growth in the secondary market.
Okay, and then earlier you said that something about the peg of the token. Can you elaborate more on that?
Yeah, so I think last time we were talking about just my background in Steam and stuff and where I got the idea for this project. And that was looking at the Steam dollar price action end of 2017. And what we had was an instrument that was pegged to the downside at $1, and the peg was fully functional at that time. And then what that led to was speculators being able to take large positions in SBD, knowing the risk was $1 and actually pumping it. I think
Up to 10
$14 or
or
something was
40,
the high
yeah,
point.
yeah.
It was like, and that was the core. That was the best time to be publishing on Steam. So yeah, we got a bit of inspiration from that. That if you've got something that's pegged to the downside with limited risk, but it can free float to the upside, then people are going to be wanting to invest and speculate on that asset.
Yeah, but in your case, the peg would be what? Would be anchored on net asset value, yeah?
Yeah, correct. So NAV, net asset value. So our peg won't be to $1 or 50 cents or some other currency. Our peg will be at net asset value, which will be the total amount of money in the fund divided by the total amount of tokens outstanding. And to enforce that peg, so we don't see a break like we've seen in SBD, the company will actually buy back shares if they fall below NAV. And that will be with company money. Because in that situation, if we're out on the open market and the token's trading below NAV, that suggests there's insufficient demand for the token. So we'll be pulling shares out of the market in that situation.
How are you to organize the buyback? I mean, assuming that the token would be listed on different exchanges.
Yeah, so that would be with company
or
funds. We'd need.
would you create an interface? Then I could come and say, okay, on the exchange the token trades at 68 cents, so give me $1.
Yeah, so we're going to have our own sort of internal market available on the website,
Okay.
but we won't restrict ourselves to just doing that. Like if there's a price crisis on one exchange or another and tokens are cheap, and let me clarify here, like if tokens are trading below the value of NAV, that's free money. Because if the shares are worth 80 cents a share and then someone's selling them at 60 cents a share, the company would be stupid not to step in and buy them because that's a 20-cent profit like that. So our primary source will be on our own little single market DEX, but we'll also step in on exchange if we need to.
And another question which already probably has been answered but not recorded. The
Rewind.
selection of jurisdiction.
Yeah. So yeah, this is why we haven't sort of gone for Warbly, which is very sort of US focused, and we're actually not that interested in the US market. It's just a minefield. It's a big crypto market. It's probably the vast majority of the English speaking crypto market, but it's just a minefield. It's too difficult compared to the upper gains.
Yeah.
So what we've done is we've gone for the Bahamas, which is a very, very popular jurisdiction for hedge funds, mainly due to the favorable tax treatment there, where IBCs don't have to pay tax for the first 20 years. And that means funds can run there without their investors having to pay returns on those investments until the profits are repatriated. And another great thing about the Bahamas is our closed-end fund structure in the Bahamas, Cayman, Singapore, and Hong Kong is actually an unregulated structure that can be offered to retail. And that's because the company only issues shares once, and thereafter shares are traded openly on exchange. And the regulators assume that the exchanges and secondary markets will do their own due diligence on that front. So yeah, we've gone with the Bahamas because we can do a reputable jurisdiction where we can easily offer our product to retail, no worries.
And so people who are wanting to invest into your token won't have to go through KYC per se, right? You said the KYC is mostly done to the DEX
Uh,
or exchanges in
you
general.
just cut out a bit there. Could you please
I mean,
restate that?
I understood that he was asking if the buyers of the tokens would have to go through KYC.
Yeah, so if you're participating in our STO directly with us, if you're wanting to buy tokens from us at the seed price, pre-sale price, issue price, then we will have to KYC everyone. But our token will also be freely traded on decentralized exchanges. So if you're incredibly privacy focused and you're really averse to doing KYC, then you're free to participate in those the capital gains aspect on the secondary market.
I think that you're speaking to our crowd because our crowd is very privacy focused. And you know, there has been a bit of concern regarding security tokens because again, one of the big things that you have to go through KYC. So it's interesting to see like you taking this model where, uh, like you could, it's up on the exchanges whether or not they want to do KYC. However, your token is still freely available on the market for purchase. Do means that doesn't require KYC.
Yeah, exactly. So I think we found a really good middle ground there where the token is accessible, yeah, compliant. But regarding privacy, like when someone says they don't do KYC, I have to question how serious they are because, like, I didn't do KYC with my exchange either until I needed to start withdrawing more than $10,000 at a time. So if you're a big player in crypto, if you're doing big withdrawals, big trades, chances are you KYC'd someone. Uh, if not, you'd probably find some little gray area backdoor where you've got you're managing to get around it, but you're probably also paying a price premium for that privacy.
Yeah, you probably, yeah, we are paying premiums for that for sure.
Yeah, but I mean, the KYC is not always about privacy. I mean, generally, I'm not a person who is very concerned about my personal data. Okay. But from the other hand, if I have to provide my personal data to some unknown setup, like Warbly, for example, which is registered in Singapore, and I know fuck all about them, really, then, okay, that's a bit tricky because, I mean, I don't mind doing KYC with the registered financial institution regulated by somebody in a decent jurisdiction, okay? But if I have to do KYC with some, well, sorry for the wording, but I mean, dodgy setup. I'm not talking about this project. I'm talking about some exchanges, located in China or Vietnam or who the hell knows where. Then it gets a bit tricky for me. So I don't have
Yeah,
any
like
problem with KYC in principle. I have a problem with providing my data to everybody all over the place, because I don't know what's going to happen with this data.
yeah,
So
like
that's
I
my
come from
problem.
Forex, and like foreign exchange brokers, you've got to do KYC with every one of them. And like I've changed my phone number quite a few times because I used to just get calls constantly, like at least 4 or 5 times a day.
Yeah,
So some
by our
dodgy broker has sold my data onto other brokers and other cold calling agencies and said this person is interested in Forex, and you just end up getting swamped. But that's in the regulated financial industry. So
Well, one of the solutions is to get the premium number. So if they call you, you get paid.
Is that something
What's
that
that? A
exists?
premium?
You know, you can
Yeah.
get a premium number. So if somebody is calling you, you actually get paid for it.
Huh. I never heard that
Yeah,
actually.
okay. I've never heard that.
Okay. Well, moving on. Let's see. I'm just digging through some of the questions here. So you launched your token back in July 2018, right?
Yeah, and that was we actually, we weren't sure how much resources were going to cost, but we just wanted to be first to the punch. So we got a token out there quite quickly in July. But we weren't actually ready to bring something to market at that point in time. But we were one of the first tokens issued on EOS way back then. I actually did a search for our name the other day on Google, and this screenshot of a Telegram chat came up with like people in the EOS Telegram going, "Oh, look, this token ANX has just been issued. Another airdrop coming." And yeah, I thought that was pretty.
Okay.
Fair enough. Fair enough. And you say you guys are not like you guys are still raising like your C rounds, if you will, from different individuals. Yeah.
Can you said we're still raising capital from individuals?
Yeah.
Yeah, so we're doing our seed round. So in the background, we're targeting big investors, trying to get enough money to get this off the ground. But our seed sale is also just open to anyone who's willing to invest $2,000 or more, just to keep the sort of administrative overheads down and to justify the price discount you get, because the seed tokens are 67 cents on the dollar, which is a 33% discount. So yeah, that's open to anyone who's willing to complete KYC and invest 2K or more.
Okay. Fair enough. Fair enough.
Just curious, how do you do the KYC?
So that'll just be manually for the moment in this seed round. But eventually, we'll, for the proper sale, we'll hook in with what's it called? I think it's called Jumio. I'm not sure, because here where I am, there's another company called Jumia, and I'm mixing them up. But yeah, we'll hook in with one of those big KYC providers, and that'll provide a bit of security on that front.
Okay. Just if you don't mind me asking, how big is your team?
The team is actually quite small right now, and I'd say that's actually our biggest weakness. A, in trying to raise capital, and B, present this project. It's a bit of a chicken or the egg. You need money to get good people, and you need good people to get good money. Yeah, exactly. So we're just doing the best we can right now. If anyone is awesome and talented and willing to work for tokens, then shout me out.
Nice. Nice.
Okay.
But like, how many individuals do you have on the team, if you don't mind?
I started it with a couple of guys. They're more just sort of shareholders. They're not that active in the actual day-to-day operations. I'm out here working like 70-hour weeks.
Oh, wow.
But
Okay.
I've got a great UX guy from Brazil and his partner, a web developer, and they just work brilliantly together. Like, I've worked with UX and web dev guys before, and like the UX makes something brilliant, and then the web developer has a go at it and like totally trashes it. It doesn't look anything like the wireframe that the UX guy put his heart into. And these guys are like, they just work brilliantly together. Like our current website reflects Kozak's design vision down to the very last pixel. And we built that website back April last year, so it's probably about due for a refresh. But yeah, I really like those guys. We've also just onboarded Chief of Operations, Nick. He's got like a 10-year background in security, engineering, and project management. And I think he's going to bring a lot of the top-down organizational, directional skills to the team. We're scouting for a CFO and CTO. That would sound strange for your average sort of technical project. But ANX really isn't a technical project. We're not doing artificial intelligence. We're not putting humans on the moon.
Not yet,
so
not yet,
we're gonna Yeah, not yet, not yet. Maybe we'll do the Tesla SpaceX thing later.
Okay.
So we're going to outsource a lot of our smart contract development, and you can these days in this modern age, you can get some really great work done really cheaply. Like our smart contract development with staking, voting, dividends, internal market on the website is only going to run us literally like 20 grand plus RAM and CPU resources and all that. Compare that to hiring a single full-time developer, 100K.
Right, right. Minimum.
So like, yeah, exactly. So like,
Well, it
for a
depends
fifth of
where
the
you
cost of
hire
putting
him.
yeah, it depends. But at the end of the day, one guy probably wouldn't be able to get the job done either, or he might produce
Yes.
substandard work. So we're going to outsource to a reputable firm that also does security audits. So they'll be developing our contract, and then a separate team will also be auditing that contract.
Okay, cool. Peter, you got any more questions?
No, I think we have covered more or less
Yeah, well, including the previous podcast, but
all the important bits and pieces.
yeah. Oscar, do you have something you want to add that we might have missed?
Yeah, I can't remember how I finished this off last time, but yeah, I'd just like to say that our seed rounds are open to anyone. Like all these ICOs in 2017, you got big VC buying in at like 10 cents, and then the token was going at like 50 cents. And what happened, you see it on every chart, is you get the moon once it hits exchange, and then all the early investors are dumping, and you get that spike down. And you can see that on lots and lots of ICO projects. So right now, our seed round, you're taking a bit more risk than other investors who come in once we're ready to go 100% public. But on the same note, you're getting in cheap, you're getting in early. And I think that's a great opportunity, which isn't usually out there available to the general public.
Cool, and you're gonna have another white paper coming out, right?
Yeah, that's the one. Thanks for jogging my memory. That's just our next project. Next thing on the timeline. We'll be looking to have a light paper out in the next couple of weeks. We're calling it a light paper for a reason. We don't believe you need to have like these epic thesis documents for projects that never even produce a product. The original white paper for Bitcoin was 3,000 words, so we'll be aiming for something in that region. It'll be telling you everything you need to know about the project and not much else.
Cool, cool. Okay, well, before we say goodbye, I just want to, again, this is not financial advice. None of, well, at least I'm not a certified financial advisor. Oscar is a great friend of the platform. He's contributed a lot to helping, reward content creators, but also answering questions about his project on the forum. However, this is not an endorsement. Do your own research, and your best source of information is Oscar himself. If you have any questions, just drop your question on his forum. That's eos.discussions.app/anoxio. You can find it on the right sidebar, one of the first ones. Yeah, so with that, thank you, Oscar, for coming on again. Thank you, Peter, for coming on again. And we will see you guys next time.
Cheers.
Sweet. Thanks, guys. Thanks for having me again.
Cheers.